Hey Simon, tell us, is it true that Chinese equities have been outperforming US stocks?
Oh, absolutely. Not only did Chinese equities beat their American competitors, China has been the best performing major stock market in the world for 2020. The CSI 300 index has left the S&P 500 in the dust. And Chinex, China's technology and startup board, has outpaced the Nasdaq 100.
So, what's been behind this outperformance?
Well, a lot of it comes down to China's management of the pandemic. They have managed the pandemic down to very low and containable numbers to enable them to reopen their economy. And as a result, China has been the only major economy in the world showing any growth lately. Note also that Chinese stock valuations were much lower than the developed markets to begin with. So, since the pandemic, China has been able to offer that combination of lower valuations and stronger economic growth.
Now, I believe that the spread between the yields on the 10-year China government bond and the 10-year US Treasury bond recently hit the widest ever level recorded. How does that tie in with all of this?
Yeah, well, the spread between the 10-year China government bond yield minus the 10-year US Treasury yield reached a historical high of 244 basis points early in the month of August. Not coincidentally, the spread widening started after COVID-19 hit. So it's not just about management of the spread of COVID-19. It also goes to the economic management of the pandemic. Because China focused very successfully on suppressing the virus, it hasn't had to do nearly as much as the United States in offsetting the economic damage caused by the pandemic. And this is reflected in higher central bank policy rates and government bond yields in China. But the market is also telling us something about future economic growth. These are 10-year bond yield differentials. So they are also speaking to us of the market's expectations of stronger economic growth prospects for China versus the United States for many years to come.
But why has Chinex done better than the Nasdaq in the middle of a tech war between the US and China?
One, the pandemic has accelerated digitization in China. Online shopping, content streaming, gaming, telehealth, virtual real estate showrooms, and even B2B or business-to-business transactions. Two, US semiconductor bans have triggered a drive for technological self-sufficiency in China. This is a massive project. The Chinese government last year established a $30 billion national semiconductor fund, and private sector money has since followed that into both venture capital and stock market investments. Three, there is likely to be more local sourcing of IT products within China. This will be partly patriotic buying, but this will also be partly practical buying because US bans on apps such as WeChat and TikTok will force Chinese consumers towards local substitutes which allow interface with Chinese-owned apps.
Fascinating. So what's the key takeaway from this, Simon?
Simply overweight China. It's already over 40% of the MSCI Emerging Market Index, and that weight will grow. Indeed, given how China has handled the pandemic, it is already easily the most investable market now within the emerging market.